Yeah, the main proximate driver was the one rate hike from the Reserve Bank of Australia, and maybe it sounds a bit odd to kind of change your numbers on one rate hike, but unfolding over the latter part of last year as the discussion started to turn from more easing to hiking, actually consumers became more cautious and they entered that period quite cautious. And when I say became more cautious, our confidence numbers really started to tail off, particularly questions about the longer term outlook. We ask a question on the economy in 5 years, for instance. Over January, that hit the lowest level in the history of the survey, including during the pandemic. And coming into the period more cautious, households have been saving a lot. They've been paying a lot extra off their mortgages. The Reserve Bank has some data on the mortgage payments beyond people's minimum, and that is almost back to a record high. So both of those enough to see us just, snug our numbers down a little bit. Look, consumption we expect to be a little bit weaker, but as I said, it already emerged in the latter stages of last year and early this year that it would be a bit weaker. I think the main message for business in general has not changed, and it's the same as it's been the last few years. We're in a supply-constrained world rather than a demand-constrained world. What the slowdown in consumption is being driven by is higher rates, because that's what the bank needs to do to keep inflation in target. It's the supply side. It's the access to the materials and labour at the right price, which I think is the main constraint for most business, not the fact demand might be too weak. This is quite a similar story. China is dancing to its own tune economically in the post-crisis period, but most other economies have a similar mix of demand being constrained by the supply side, this kind of just slightly perky inflation story. Our nearest neighbour, New Zealand, for instance, expectations of when the hiking cycle might start after a more extended easing cycle are just kind of being brought forward, and the market backed a bit off the idea in the US, for instance, that we might get some more rate cuts. I mean, we still think we will, but that tension between demand and supply showing up in inflation, pretty common kind of global theme. It's been with us for 4 years. I think it's the way of the future.